Welcome to TradeTheABI.com. This is John's Reports for the 13th of November, and we continue to plug away. Yesterday, we've been in this continuation bull within a small week period here with declining DOC steel, waiting for, on our shakeout here, the Azure to meet gold. And, well, we've already been experiencing some dips in the shakeout. That can happen when you're above that plus 15. You have everything well above that. I mean, 18 for magenta on a daily, and that's pretty impressive. So we expect moves back down towards the ABM yellow, which is why we keep talking about the ABM yellow. It's at 71, which is interesting because we had that 74 support range that we had seen, and then a couple other new ones that had popped up intraday the other day on positive extremes. And they just keep getting filled perfectly. No objections to them. Actually, it's a good time to look at our 50K on that because it had bought back earlier on the reset of the DOC red, and I believe that puts us at equity highs. Let's do calculation. Almost $1,000,001 periodic returns. Always good to look at that, what it's done for the year so far. And from now, this is the T strategy, the Opus Power Mode 2, Opus 2T. So you can see at its peak levels right there. So all in all, good stuff. Turning to the NASDAQ, same situation. Closer to a week, and we talked about this, we thought the NASDAQ would be the first one that would begin the turnover because it had outperformed in general, and we'll see if that crossover point. We now have cyan over green, not over red at this particular point, so a break of that ABM yellow becomes significant for the NASDAQ, just as it does for the ES, and that's all the way up at 81.99. From a Euro standpoint, obviously this question about whether or not EU Brexit situation will change, whether the Tories will not even run a candidate in the Liberal districts that Brexit is going to be doing if they've reached that agreement. You can see below the red line there are plenty of people still selling euros. And that was all a fill of positive extremes that went back to here, and still have that dip below the red line. Right there, it did touch the lows back on this, so I don't know that it's critical that it gets there. The problem really has become, will there be a Brexit deal, or will it just continue in infinitum being postponed? And so I think there's a little uncertainty right there. That's going to have a downward, we talked about this the other day, it's going to have to start having some pressure on the S&P from a return standpoint, not to mention the fact that Europe's economy is just a disaster so far. But oil, holding up, which means the U.S. is holding up, and that's causing pressure to the downside for gold. We knew that there was a lot of positive extremes as well as dips below the red lines that had needed to be filled from way back, and that's just taking place now, and there's just no inflationary pressures anywhere. From an intraday standpoint, we rose up, did what I thought we would get to, was 3,100. Once you get over that 85 plus, we ended up with some positive extremes that developed right in there intraday. So when the peak came, it was an expectation that we would make it back down there to the 97, and it just kept going. We ended up with no strong conversion. Right down here, we ended up with a nice little positive burst, which you could expect once the green got over cyan, and that did pop back up right to the exact same resistance where any of these would have worked, even this one right back here, because you still had the orange popping up above. It's just a question of, in that case, you had rising shakeout and yellow at that particular point. Once it got to sort of a flat period, this one became far more interesting as a rejection point. It happened very early in that bar, and then boom, that one led to the cascade lower. We ended up with a nice dip, which you knew would be short-lived, so I usually look to the 38, 50% range in that. Sometimes if you get immediate weakness, the 23% will show the weakness, but it was pretty decent right here at the 23 with rising red DOC, and it continued for a little while until you ended up with the spike. Even though you had the steel cross here, You could still expect a little bit more strength unless the orange popped up. So if you jump in a little early there, you just have to wait it out. The problem you have there is you had rising shakeout yellow there, and you see as it flattens out, it becomes far weaker, and that's led to where we're at currently, which is just a small dip coming down. Had to fill in the dip below the red line right there, which it took out, and so the likelihood is that you come back up to this 100% mark, or the 0% really, where that was, so back up to 81 range. So it'll fluctuate back there, and then that 74 was that previous algo level. So we'll see if it's able to get back and test that one again. And if it stays above it, that could be fairly decent from a bullish standpoint. So we'll play it as it goes, but we know we're getting to a little precipice point right here, mid-month, and that could be more probable. Of course, the impeachment hearing starts, so the market will be looking for that to see if there's any fireworks there that can justify either buying or selling. So we'll see it clearly on the algos ahead of time. As always, though, I will put up anything that's unique and relevant. Trade well. We'll talk again later.